It's customary at this time of the year to look back and see what's happened in our property markets and I guess look forward and see what's ahead. Well, Australia's had a boom and gloom economy over 2012, hasn't it? On the one hand, our economy still grew, and like many others around the world, it was underpinned by our resources boom. But on the other hand, consumers and businesses were gloomy. And it was much the same with property. Some areas fared well throughout the year, and many didn't. However, looking back, I think 2012 is going to be remembered as the year the property market turned. It didn't crash like many property pessimists predicted. Sure, it stalled in some areas, dropped a little in others, and prices fell significantly in a few spots. But in the middle of the year, things slowly started to change. I guess our property market started with a bit of a tug of war between falling interest rates on the one hand and housing uncertainty, market uncertainty, with world economic issues on the other hand. There were concerns about Europe. Maybe that European financial system would bring the world financial system to its knees. There were worries about the US economy. I guess Europe's still a bit of a basket case and will remain so for a few years. However, the major risks to the financial system, the world's financial system, seem to have been averted. And over the year, the US economy seems to have improved, albeit slowly. However, we've got something new to worry about. The health of our resources boom has, I guess, recently come into question. The Chinese economy, the powerhouse behind our resources boom, slowed down during the year. Falling commodity prices and the high cost of production have brought concerns about the future of many of Australia's major mining projects. Well, what happened in the property markets? We started the year with more properties on the market than there were buyers, as many potential homeowners and investors stood on the sidelines. They were too nervous. I guess they were waiting to see that the property market had actually bottomed. Of course, it's not really as simple as all that is there. There's not just one property market. Well-priced properties in prime locations and those with an element of scarcity, I guess those in the middle price ranges, somewhere between $450,000 and $850,000, they've still been selling well over the year, even though clearly there was less interest from both owner-occupiers and investors than before. However, B and C class properties, they haven't been selling well at all, nor have expensive properties. Those are the more affluent suburbs. Some dropped up to 10%. And in some of the holiday locations, the regional locations, the poorer locations, they dropped even more. And some couldn't be given away. Well, look, it really wasn't as bad as that, was it? But unless you live in some remote regional area, I guess. But you had to give a steep discount to get somebody to buy them. But in the middle of the year, around May, things changed. Eventually, a combination of increasing affordability due to higher wages, lower prices, falling interest rates, all those put together brought buyers back into the market. This trend has been reported by RP data, by Australian property monitors, Residex, the Australian Bureau of Statistics. The trend is clear. The market is slowly turning. So overall, our markets didn't crash like lots of people predicted, and at the end of the year, they remained pretty flat over the year, I guess. They were about 5.6% lower than their historic highs. That was way back in November 2010, but they were up about 2% around Australia from their lows. The low was reached in May 2012. But as the year finished off, we had lots of good news. A positive sign was Australian consumers started to become confident. This is measured by the Westpac Melbourne Institute Consumer Confidence Index. Look, a good way of interpreting this index is if more people are confident the index is above 100, and that's where it finished off. As in November 2012, the Consumer Sentiment Index was 104. Interestingly, at much the same time, CommSec reported that housing affordability had been at its best for about a decade, interestingly. Consumer confidence is one of the most important leading indicators of the housing market. Put simply, when consumers are lacking in confidence, as they have been for the last couple of years, they tend not to make important decisions. They don't buy houses or move houses or buy investments or buy cars. But when confidence is high, the number of home sales increase. And this is already translating into higher levels of finance approvals, which is another important leading indicator. If you think about it, home buyers and investors, they start to organise their finance a few months before they buy property. What all these numbers and figures don't show is how fragmented the markets are. We know there's not just one property market in Australia. There are many different markets, different sectors geographically, different price brackets, different types of property. And there's no doubt that home values are still falling in some areas of Australia. They're rising in others, but overall, things are improving. Buyers are back in the market, but they're very selective. They're going to buy at the right price. Stabilising house prices and interest rates are breathing life back into our property markets. Auction clearances finished the year on a high note as well. Vacancy rates are low, less than 2% around Australia, other than in Melbourne. That's pushing rentals up all over Australia. And this, together with better affordability, is going to bring more home buyers, especially first home buyers, back into the market in 2013. At the same time, overseas investors are snapping up many of our new apartment projects, and baby boomers are back in the market. They're buying properties in their self-managed superannuation funds. Putting all this together means we've moved into the stabilisation phase of our property cycle. You see, markets don't move from the downturn straight up to the upturn. There's a period of time when buyers return and they take up some of the slack in prices. And I expect more buyers to return in 2013 when they realise that prices aren't going to fall any further. By the way, the stabilisation phase of the cycle is a great time for smart home buyers and strategic property investors to get set for the next stage, for the upturn stage of the cycle. This may be a good time for you to get set. A time when a lot of people are still standing at the sidelines waiting to see how things are going. If you want to make the most of the property cycle in 2013, I'll be giving you regular updates through this website, through my Property Update daily blog. And if you want to get a foothold and get going, why not get the latest edition of my best-selling book, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. It's updated for the current conditions with lots of new information, and it's become the classic book over the last 6 years, read by tens and tens of thousands of property investors. Let's hope 2013 is a great year for you, your family and Australia, and I look forward to bringing you regular property updates throughout 2013.